I'm not touching it today. This will probably be a gap that gets filled back to the downside. Just my guess, I could be wrong. Hey guys, Tony Denaro, welcome back to the channel. Thanks for tuning back in. Let's talk BBBY, Bed Bath & Beyond. It shot up in pre-market today based on a letter from Ryan Cohen. I said first thing in the live stream this morning that I was not going to touch it with a 10-foot pole and that it would probably gap fill back down towards the end of the day. And that's pretty much exactly what happened. Let's dig into this a little bit further. All right, so this news article that I have up on the screen hit the Wall Street Journal and the market in pre-market hours, and Bed Bath & Beyond started running. And I did read this article and Ryan Cohen's letter before the market opened so that I would have a sense of what was going on. Very quickly, Ryan Cohen took a large stake, about 9.7% in Bed Bath & Beyond, and is pushing for changes in the company. Actually, reading here, it was 9.8%, a 9.8% stake in Bed Bath & Beyond. And that makes him a top 5 shareholder in the company with a position that large, giving him a potential to have a seat on the board or one of his representatives to have a seat on the board. Now, why would he want to do that? Well, if we look at the chart for Bed Bath & Beyond, it's not had a very good history, coming from a high back in 2014 of 80 bucks all the way down to $3.40 in April of 2020. It did get a spike in January and June of 2021, along with some of the other meme stocks. But let's zoom in a little bit and see what's been going on in the last 12 months and take a look at the letter that Ryan Cohen wrote to the board of Bed Bath & Beyond. For the last 12 months, if we take the median price of Bed Bath & Beyond, it's basically been hovering around 30 bucks, although back in October to November, it fell down to $15 to $16 range, losing about 50% of its value in the last 12 months. And indeed, just prior to the run-up in pre-market, it was trading at $16, and it ran up in pre-market to $35.14 this morning, opening this morning at just over 31 bucks, declining for most of the day, although it did manage a little bit of recovery in the last hour of the day. Now, you might be asking yourself, why did it run up in pre-market and why was that not sustained? Was this a short squeeze or was there something else going on? I want to share with you my analysis that I did prior to the market opening and my opinion, my thoughts. Feel free to give me your comments down below and let me know what you think. Here is the actual letter from Ryan Cohen to the board of directors, and in the second paragraph, he says that he has carefully assessed the assets, balance sheet, corporate governance, executive compensation, existing strategy, and potential alternatives. And while RC Ventures LLC likes Bed Bath's brand and capital allocation policy, they have concerns about the leadership's compensation relative to the performance of the company and its strategy for reigniting meaningful growth. Now, this company has been a bit of a train wreck for the last several years, and that much of Ryan's statement I agree with so far. Approximately 18 months after releasing a 170-page Cover the Waterfront plan, the company is struggling to reverse sustained market share losses, stem years-long share price declines, and navigate supply chain volatility. Meanwhile, the company's named executive officers were collectively awarded $36 million in compensation, a seemingly outsized sum for a retailer with nearly a $1.6 billion market capitalization. In this table, Mr. Cohen lays out a comparison of Bed Bath & Beyond 1, 3, 5, and 10-year performance relative to the S&P, and it has underperformed in every single category, down 43% in the last year compared to the S&P being up 16.5%. Over 10 years, Bed Bath & Beyond is down 69%, while the S&P, on the other hand, is up 284%. Those are telling numbers that the management has not been taking the right direction with this company. On the bottom row of this table, it compares Bed Bath & Beyond to its peer group. So how should Bed Bath & Beyond be performing compared to its competitors? In 1 year, competitors were up 20%, while Bed Bath & Beyond is down 43%. Over 10 years, competitors in the market of Bed Bath & Beyond are up 217%, while Bed Bath & Beyond is down 69%. Mr. Cohen goes on in his letter to suggest several strategies to address the problems with Bed Bath & Beyond, bring greater focus to the company's strategy, The second suggestion from Mr. Cohen is breaking up the company and spinning off its baby brand. In fact, he says here in this paragraph, we believe it is likely much more valuable than the company's entire market capitalization today. That alone is a compelling reason to take a position in Bed Bath & Beyond. If you can convince the board to spin off the baby line and you think it is worth more than the entire market capitalization of the company, well, you get a spin-off, you get your money back, and you still have some remainder of Bed Bath & Beyond. And his final suggestion is a full sale of the company to a well-capitalized acquiring entity. Ryan suggests selling the company to one of many well-capitalized financial sponsors with track records in the retail and consumer sectors and the ability to pay a meaningful premium. So between the potential spin-off of the baby brand or selling the company outright to someone else at a premium, that to me explained why the stock took a jump in pre-market. In addition, we had some FOMO buying going on. However, this is not a huge enough news item to ignite a short squeeze because we're talking about breaking the company up and selling it off if Ryan Cohen has his way. Typically, when these things jump due to this type of news in pre-market, they jump to the presumed valuation of the company, and they either hold that value from there, trade flat throughout the day, or trade down. Just based on my analysis of the news this morning, my thoughts is it would not be able to hold a $30+ price value for the duration of the day. I know you were hoping for news that Bed Bath & Beyond was starting a short squeeze. I don't see that as the case. If you'd like to hear my views unfiltered from this morning's live stream, stick around. It's going to be right after I finish talking, a 1-minute clip and outtake from this morning's live stream. Thanks for watching. Please listen in. J-Star says BBBY could cause the MOAS. It's going to be an interesting one to watch if it moves up. Here's BBBY in the left-hand side. Let's talk about BBBY for a second. I read the thing about Ryan Cohen. He has almost a 10% ownership in BBBY, and the letter that he wrote to the board basically said, look, you guys are driving this company into the ground. The company's failing, and you're overpaying yourself. Your executive compensation is overweighted compared to the performance of the company, and Ryan wants to see the company broken up and sold off in bits and pieces to maximize shareholder value. I'm staying out of this play at the moment. Yeah. So my general thoughts on BBBY, it ran up on news. It ran up on FOMO, people thinking there's going to be a short squeeze. It ran up to maybe what people are thinking is the value of the company if they're breaking it up and selling it off. BBBY has not been really a strong performer, so I'm not buying this jump. If you were already in it, now would be a good time to take profits, I think. This does not scream to me run and buy BBBY. I'm not touching it today. This will probably be a gap that gets filled back to the downside. Just my guess. I could be wrong.